What is going on, investors? Hopefully you guys are having a great day out there. Time to talk about Adobe Incorporated. They just reported their Q2 earnings after the bell today. We're going to jump into them. We'll take a look at the revenue, not only from this quarter, but they also gave guidance on Q3, the upcoming quarter as well. We'll jump under the numbers like we always do as long as they load here. There they go. So we'll take a look at the subscription revenue, the profit, the margins on this type of thing, the balance sheet like we always do. And then we'll get over the stock chart. This thing has been on a run. It's sideways consolidated a while. And I'll be honest with you, I should have got into this name. Adobe, if you've been following this channel for a while, is a stock I've wanted to get into for a while now. And I don't know about you, leave me a comment down below. Is there a stock out there that you really like, but for some reason just have never been able to buy it? For me, it's probably Adobe's at the top of that list. For a while there, it was Microsoft. Now it's Adobe. Leave me a comment down below if you've got a stock like that. Maybe it's just a problem that I have with this one. So over the last year, stocks up 31%, year to date up 8%, just a very steady performer. Big market cap on this one, $262 billion. We are currently trading at or very close to all-time highs. In fact, in the after hours, we're up at 564 on that. The 52-week high was at 561. So it looks like we're breaking up into all-time highs with Adobe. You've got a 45 PE on this one. This one is never traditionally that cheap just because they have such solid growth. And when we get over the numbers too on this one, the gross margins on this one is just fantastic. So it's just a stock I really like from all those angles. Now, the stock is gaining in the after hours mainly because just an easy beat on the revenue, the profits, and then they gave upside guidance. I think what the street is expecting is, look, they just beat Q2 really easily. Now they gave us Q3 guidance coming in at a $3.88 billion. I think this is mean to say that the consensus was 3.83. So they're coming up a little bit higher than that. You notice in this most recent quarter, they were at $3.84 billion. So they're tacking on another $0.04 billion. Well, I think the street is expecting that, well, maybe they get up to 3.9, maybe they get up to 3.95, something like that, because they just crushed these numbers, and we're up 23% year over year on that. Now, let's jump over the numbers like we talked about. We'll take a look at these from a revenue and a profit perspective. We've got our 3 months ended here. This is the most recent quarter, the farthest left-hand column. The middle or second column here is quarter over quarter. So this is last year. And then they also give us a 6-month view since this is Q2. So the right-hand column is 6 months ago from a year ago period. And then we've got the left-hand column is the most recent 6 months. So we've got the subscription revenue went from 2.8 again up to that 3.5. They're guiding to that, I think, 3.83, 3.88 when we get down to this total revenues down here. Notice that we went from 3.1 billion up to this 3.8 billion over the last 6 months, going from 6.2 up to 7.7. It's just lovely growth from a relatively mature software company. Now, here's where it gets just absolutely fantastic. We take a look at our cost of revenue. This is how much it cost to generate this revenue. Now, it's not the full expenses, okay? We got other operating expenses here, which we'll take a look at here in a second. But I just want to show you that their cost structure leaves so much room for profit and so much room for error, okay? Even if you had revenues decline for whatever reason, look at this total cost of revenue. They spent $444 million to make this $3.8 billion. $3.8 billion. They only had to spend $444 million. That's why I like software companies. If you follow the channel, I like software. I like high margin software. I like growing top line software. Okay. Just my personal bias. Notice here for the last 6 months, we spent $891 to make $7.7 billion. You just got to love that. Take a look at the gross profit. This is what investors absolutely love on Wall Street. And you know, when you come over here on a stock chart, everybody loves this type of thing. So we made this 3.8 billion. Almost all of it falls down to gross profit. Okay. About 3.4 billion of it falls down to gross profit because you're only taking off this 444. So for total revenues here for the 6 months, you got 7.7 billion, 6.9 billion of it falls down to this gross profit. Now you have other expenses here. Okay. We do have research and development. We've got some selling and marketing. We see it did tick up in the most recent quarter, as you'd expect. Revenues ticking up. They've got to market and sell a little bit more of that. And you got a little bit of general administrative. What I like is this is a mature company. It's not one of these like evolving tech companies that are just burning through lots of cash on the operating side. No, research and development stayed relatively flat. General administrative stayed relatively flat. These amortization of intangibles staying flat. It's basically a rounding error. It's no big deal. And then selling and marketing went up, but it went up in relation to how much we're increasing our revenues as well. That gives us total operating expenses here. We'll call this $2 billion. It's $1.985 billion. Last year in this time for the 3-month period, we're at 1.7. You see here for the 6 months, you're sitting right at $4 billion, which is just shows you that there's a consistency here, right? Okay, so we just spent about $2 billion in this quarter. For 6 months, you're right at a $2 billion run rate per quarter in terms of operating expenses. And you see here, this is where we were in the previous 6 periods. So you get this revenue, you take off these operating expenses, these total costs of revenues, then you take off operating expenses and you get down to your operating income, $1.4 billion. So off of $3.8 billion, you're printing $1.4 billion of it to that bottom line. That's about $400 million over the previous period. And you see here for the 6 months, we went from 1.9 up to this $2.8 billion. This is your operating income. Now you got to pay some taxes. There's maybe some interest expense or some gains or whatever it might be. You get down to this net income number of $1.1 billion. You're sitting right about there, a little bit lower in the previous period. Just a super steady business from a net income perspective. They print tons of money. So what are they doing with this cash? Because as you can imagine, when you come down here to the balance sheet of Adobe, they're probably sitting on a pretty good amount of cash, okay? You're printing this type of money and you've got some nice operating income. You got high gross margins. Well, what are you spending the money on? There's a couple things that a company like this could spend the money on. They could pay a dividend. They don't do that. Adobe doesn't pay a dividend. In fact, I think maybe if they did, the share price might appreciate, but I don't necessarily want them to do that. If I wanted to buy Adobe shares, wouldn't make me run out and buy it even more. The other thing is they can grow through acquisition, which Adobe has such a dominant, they do acquisitions, but it is not there's not necessarily companies out there where they can really grow a lot through acquisition. They'd also maybe have to blow up this balance sheet, maybe take on more debt to, execute on something like that or issue more shares of stock. The other thing that they could do is maybe a share buyback, which we'll talk about here in a second. So we've got cash and cash equivalents and these short-term investments here on the balance sheet. This looks like about 6 months ago. So you get about a 6-month view here on the balance sheet. The left-hand column is our most recent period. It looks like we have about we'll call that $5.7 billion worth of cash. We're sitting about there. In fact, maybe a little bit more cash in the previous period. So you might wonder, again, I just showed you, this is a company that's printing cash like an ATM machine. Their cash actually went down. So when we get to cash flows, we'll see where it went. You see here, total assets over the last year, basically flat, up just marginally about $1.3 billion to $25.5 billion, $25.6 billion on that total asset side. From the liability side, you love to see this. Okay, so we do have some debt here. It was at 4.17. Now you're at 4.12. You're basically flat on this debt side, and they could wipe this out if they wanted to with their cash and cash equivalents. All things being considered, total liabilities coming in at $11.7 billion. It's not a lot of liabilities when you're talking about a company like this. Now, in terms of cash flows, we're going to see where this cash went, right? We talked about how they had some cash flow out of the balance sheet. Let's take a look here. For the last 3 months, you've got the right-hand column. The left-hand column is the most recent quarter. You pull down that net income number, you get to add back in non-cash stuff like stock-based compensation, depreciation, other things like that. You get down to this net cash provided by operating activities. You're sitting right at about $2 billion. Previous period, I'll call that $1.2 billion. So nice growth on the cash flow side. Not a lot of it too was driven by kind of what I call add backs. It's not like stock-based compensation ballooned or depreciation ballooned and kind of made this look a little bit better than it was. No, these numbers are actually pretty relatively consistent. Now you got cash from investing activities, not a lot here, okay? They purchased some property and equipment. They've got this is really just exchanging treasury notes and things like that. Look, barely any money flowed out from there. Now, here we go. Cash flows from financing activities. repurchase of common stock. You notice in the quarter, just in the last 3 months, they purchased $1 billion. Yes, that is $1 billion with a B of common stock just in the last 3 months. And I can imagine if they stretch this back to 6 months, which they don't do, but I can imagine if we stretch this back to 6 months, they probably bought back even more stock than that. You see here in the last period, they did 850. So they're increasing this buyback, at least on a year-over-year basis. And so you see net cash used by financing activities, we actually burned through about $1 billion. So all things being considered, this is a very, very clean cash flow statements. They are buying back stock. That is how they're rewarding you as a shareholder. That also could be why when you come over the stock chart, yes, we had this big V-shaped recovery, like a lot of stocks. Okay, this one crashed down and then snapped back, and like a lot of tech stocks, found a range. Okay, you can look at this chart of Facebook, Amazon, Apple. If you tune into our Friday show, which will be again tomorrow, almost all the tech stocks did something like this, where they made this big recovery, pulled forward a ton of gains, and basically have been trading sideways since September, or sometimes even as far back as June, July of last year. So a lot of these stocks have been kind of going sideways in a range. In the case of Adobe, you've been coming in here from 460 up to 530, but hello, we just broke through it. So you gotta love to see this. Okay, we broke through these all-time highs here at 530. We did that over the last few days, and then earnings actually confirmed it. Okay, you kind of broke up here. You wanted to kind of walk back down here. Earnings confirmed it. You're up here at 560. If you're like me, you want to get back into Adobe, where's the spot where you can do it? Well, I tell you what, you could step in here if you want to. You got balls of titanium. You could step in here on Friday or even Monday of next week and buy it up here if you want, because you can look at charts of Google or maybe even like a Facebook and some of these other stocks that have kind of sideways consolidated. When they break out of that sideways consolidation, they sometimes tend to want to run. Now, you want to be a little bit careful of that, because when you break through all-time highs here, the common thing that I see is we retest down here. Okay, you can pull up a chart of Microsoft and some other stocks that I can think of off the top of my head where they kind of want to retest here. And that would be the first place where I'd want to step in this one. Maybe not all the way back down to 530, but maybe 540, which is about $23 off of where the stock is. Now, I just want you to know, if you get a pullback back down to this support level here at 530, I would not be alarmed. Okay, now, if you do break through 530 and you start, this stock breaks down, it shows you that this was kind of what you might want to call a pump fake or a head fake or whatever it is. This thing could come down to this 510, 512 area. That would be an area where I'd be interested as well to get this stock. But the momentum is on the side. We've made a nice move here. We broke through a key technical level. There is nothing but blue skies up above here. Imagine this is your airplane taking off, and this was you running down the runway, and this is you up kind of taking off just off the ground, and now you're approaching altitude where you're just continuing to go up. You're getting above the clouds now. This thing could just continue to run higher. Okay, so we'll see what happens with Adobe. Again, leave me a comment down below. Adobe is like one of the very few stocks on the stock market that I absolutely love, but for some reason, I don't own a single share of this thing. It's stupid, and maybe I'd love to take comfort hearing from some of you out there that might be in a similar spot with this, maybe this stock, or maybe some other, maybe throw me out some examples. Maybe there's some stocks that I can take a look at as well. Hopefully you guys have a great day. We will be back tomorrow with the Fang Stock Recap Show. Fang has been on fire this week, and so it's going to be an exciting show. Hopefully you guys have a great day. Good luck with your investments.